Okay, folks, welcome to Sunday Night Futures Live. What we're going to be talking about today are the events unfolding this coming week, whether they be economic data, whether or not they be earnings reports. A lot of news, not a lot of news. Some news came out after the bell on Friday of the S&P 500 rebalancing, and we'll be talking about the impact that it had on Apple and stock. Looking at the chart right here, right now, after hours, it dropped about 4%. It recovered some, but this stock, we're going to go over the monthly, weekly, and daily chart to show how extended this stock is and what a time bomb this could quite very well be as we enter the new trading week. So stick around. We'll be talking about the events in the Middle East, Ukraine, and the potential for a plot against the president of the United States before inauguration. We have a former Secret Service agent who was on Fox News. We'll play that tape in a moment, and the impact that could have on the overall equity market. We're going to talk about valuation of the market. How expensive are we? We will be looking at the Buffett indicator. We will be looking at the Schiller PE ratio. But before we get to it, and before we get to the futures action, head on over to the forum and enter. I posted this earlier. I don't know whether or not you guys got alerted to it, but I posted this earlier requesting your symbols for this evening. I only got a couple. Isaac, look, I got a couple of more. Usually we have a lot more than this. So I don't think everybody got the alert. Yeah. Okay. So we have Ron, Sean, Isaac. Good. If you're not currently a member of our free forum, use the link below, sign up. Please. Audio is no good. Hold on. Thank you for that. Let me see if I can do something about it. Is it better? Test, test, test. It's muted. All right, so we'll wait for some feedback. We'll keep going. So if you're not currently a member, sign up. It's free, no credit card required. Also, for a small fee, please join our Bull Bear Banter chat room. Great people in here sharing great information. It's a very low price, so low. All we want to do is just keep the lights on and pay the bills. We're not looking to make a profit. We're trying to build out a community, and there are some awesome people in there. So please take advantage of it. Still no good? Let me do this. I'm gonna switch. It may be of a lesser quality, but you tell me which one do you want? This microphone is better. I'm gonna my testing test. And we'll have another things with it. And tell me the okay. How about this? It actually got worse. Okay, so how about this? Is this better? I rebooted. Oy vey. No good. Wow. I'm gonna log out and log back in. I'm not gonna end the screen. I'm gonna do a refresh. I think that's the problem. Let me know if this is better. How's the audio now? I think I found out the problem. It's better. Okay, good. Awesome. Good stuff. Okay. Uh, so head on over here. Bull Bear Banter, small fee. Keep the lights on for us. And I posted the video on our top 5 stocks for the new trading week. That is over here in the feed. Trader Isaac, lots of good stuff. Thank you for your participation. Love it. Okay, so I posted the charts to our top stocks for the new trading week. That is in the forum. I also posted here the I pulled a scan for the growth stocks, rising revenues and earnings. And I've screened through TrendSpider all the stocks, and they are available to you here. You can download them, take advantage of it. It's free. So please head on over. All right, let's get to the futures action. I just cleaned off my desk. It seems more busy than it was before I cleaned it. ES. Let's begin with the ES. Let's drill down to a 5-minute chart. Looks like a flat opening. Thank you. Thank you, Jody. Okay. So, yeah, a flat opening here. Not much to talk about. Let's check out the NQ. This is the NASDAQ 100. Down a smidge. I mean, not much to talk about. I mean, we've been open for 9 minutes already. Not a big move in one direction or the other. Let's see what they're doing over in small cap land. Small caps took it on the chin late last week, and they're they're flat. I mean, everything's flat. I'm sorry, this is not the this is the Dow. Dow. RTY is the small caps. The Dow took it on the chin. I knew something was wrong there. So the rut, it also had a rough back half of the week. It kept rallying and then faded. It rallied here on Thursday, faded. Rallied here on Friday, faded. Let's see whether or not they can take us out above Friday's highs. It's not going to happen tonight. Okay, so not much going on in the small caps. Let's check in with the mid caps. Mid caps are up. They're up 0.12%. This is a gap up. Let's see whether or not we fade or do we begin to put in higher highs. Okay. So an uneventful open here. Let's switch over to the currency markets. We have the dollar, which is opening up. You don't get much price action on a Sunday night, and I'm not sure what I'm looking at here, to be honest with you. This is showing that the dollar is up by half a percentage point, yet we are down in terms of price. Dollar's down. I don't care what that says. Dollar's down relative to the close on Friday. That is an inaccurate print up here. Ignore that. And this is an outside reversal bar forming with 3 minutes, less than 3 minutes left to go in this time frame. This could set up for a pretty ugly morning for the US dollar. Let's see whether or not we take out prior lows. Euro, euro doing the pretty much the inverse of the dollar. This is a bullish setup, 15-minute time frame relative to the dollar's bearish setup. Yen is up, same type of setup here, an outside reversal bar on a 15-minute time frame. I got to tell you, if you get follow through on the euro yen, there is no way that the dollar is going to be able to rally back. They're going to sell it off and sell it off hard if the euro and yen trade in tandem. And also, if you get a big rally on the yen, and not that we're there, let's go to a weekly chart. Remember the yen carry trade. This is setting up very nicely. We broke out the week of the 25th, consolidated last week. This week, it looks as though we're going up higher. And I'll bring everybody's memory back to the beginning of August when we had a big rally in yen due to Japanese rate hikes. And the BOJ very hawkish back then, driving the yen up higher and forced liquidation of the yen carry trade. Beware, this could be a problem for U.S. equity markets if the yen begins to move up measurably. For those out there wondering what the heck the yen carry trade is, you 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 borrow in yen and then you buy in U.S. dollars. So they're pretty much zero interest rates over there. So if you could borrow there, send it over here, and make money on zero interest rates, that's the arbitrage. So once that gets threatened to be taken away, that's when volatility hits the market. Rebalance needs to happen, and that's exactly what you saw back in August when we had VIX spike up to what 60. So it was a pretty big move. Speaking of the VIX, and see what's going on there. Volatility. It's so hard to judge the VIX on an intraday time frame. You really got to go high level, and I think it's up over a third of a percentage point. But I still think that given seasonality in the month of December, we'll go to that in a moment. Uh, it's unlikely that we're going to get a measurable move to the upside here on volatility. I still think that we could possibly head down to a 12 handle, which is just where we were prior to that sell off back in, I should say, July when we broke out on VIX. We were at a 12 handle, and then we spiked up higher going into August. So if we do begin to see higher highs here, you never know, then we'll take appropriate action. Right now, that actually would look like me just getting small of long positions and entertaining where to add shorts. Right now, it's up relative to the equity market, really means nothing. This could be down a minute from now. Let's check in with gold. We have a weak dollar. This should be interesting. Are we catching a bid? And we are, but we're off session highs. They gapped it at the open, as one might expect. with the decline in the US dollar, let's check out silver. Silver down fractionally. Silver had a very good week last week. Relative to the, gold, it's holding this 20 period EMA on a weekly time frame. So this is really, really bullish stuff. I mean, I would clear off all my old drawings, start fresh, and say, "Okay, we need to start looking at adding to silver." We already own some. Do we get follow through to new weekly higher highs here? I think that would be the all clear for us to begin building more on silver. Let's check in with live cattle. Let's see if our steak is getting any cheaper. My New York strip, last week it was down. We're getting closer. Let's see it break. What else you wanna take a look at? Light sweet crude, not much happening here. Let's check in with natural gas. We have a cold front moving into the lower 48, and that is reflected here on natural gas, up 6.79%. And I didn't say hello to people. We had technical issues. Now I feel like I'm being rude. Franklin, welcome. How's the audio now, Paul? Is it all good? Hey, Pat, welcome. AAL, trailing stop loss order triggered? I'm sure you did well. Nat gas punishing the bulls? Um, no, I think natural gas is looking good. Natural gas is looking good. I've been bullish on it for a while now, so I think we have more upside on natural gas. And don't forget about the demand that is growing for energy. TZ Burton, welcome. William, welcome, sir. Uh, yeah, the data centers out there all over the globe for AI, they're just munching up energy hand over fist. Natural gas is gonna have to go up. I think the bear market on natural gas is rapidly coming to an end. What else do we wanna take a look at? Let's take a look at agriculture, soybeans. What a rip your face off rally on Friday. Let's check out how they did on the week. Soybeans threatening a breakout here. They've stopped going down. The precursor to any bull run is gravity and support. Now we're looking for a breakout on soybeans, bullish. ZC, corn, bullish. Corn is breaking out. ZW, wheat setting up very nicely here. Very, very nice. I feel like I'm forgetting something. What did I forget? Let's just do a quick check back on the NASDAQ, see if anything's changed here. Not much. Very, very thin volume tonight. Not much happening at all. So I'm getting the vibe that the market is waiting for economic data that is coming out this week. We have a big inflation number week this week. We have yields which are moving up fractionally. Volatility still positive, but not much movement there. NASDAQ trying to push positive. Okay, lackluster evening except for natural gas. Michael, should you buy UNG tomorrow? I already own Boyle. I already have exposure to natural gas. Uh, I'm not a big believer in chasing. I would look at the technicals. We can go over the chart later on to see. It's not. I know it's not extended, but I just don't like chasing, especially natural gas. It's called the widowmaker commodity for a reason. You need to be very, very disciplined. You may want to consider it's really if the horse is left the stable here, rather than buying the common stock, you may want to consider selling puts. At least if they're put to you, you're getting it at a lower price and you're getting paid a premium. So just be careful about chasing natural gas. It's very, very volatile. Okay, let's talk about the Talon. Welcome. Yes, thank you. Yeah, I always forget that. Thank you, Talon. If you could smash the like button, it helps me out the YouTube algorithm. I'd really appreciate it. Like, follow, you know the deal. We're long. We're long of Boyle, which is a leveraged product of natural gas. Not for the faint of heart, not a huge position, and it shouldn't be a huge position. We have a number of traders that are in our community that trade natural gas. Uh, if you're head on over, joining, ask questions, and see what they're doing. A lot of them are better than me at it because they just love to trade natural gas. That's what they do. So ask questions, please. That's why we have the forum. Uh, we did this. We're talking about economic data this coming week. Monday, wholesale inventories, not a biggie. Tuesday, the NFIB Optimism Index. This is in essence the small business optimism index. This can move the small caps and the mid cap. U.S. productivity, that's a revision, not a biggie. All right, so on Wednesday, this is when the big numbers come out. You get consumer confidence, a big, big number. You have discretionary names right now, which are ripping through the ceiling as measured by the XLY. That's an ETF, very heavily weighted to Amazon and secondarily Tesla. Be aware what you are buying when you buy these ETFs. All is not what it seems. So that ETF is very, very overweight. Two components. Be very, very careful. Uh, CPI. Now, remember the year-over-year number on the PCE, we got that a couple of weeks ago. That's the Federal Reserve's favorite measure of inflation. That was the first time we had a year-over-year increase in inflation. If you see that on the CPI, you're probably going to get a buckle in the market, a negative reaction. Do I think we recover? Yeah. Why? Seasonality. Thursday, initial jobless claims. We get that every week. On Thursday, we also going to get producer price index, the PPI. That's the measure of inflation at the producer level. So if you see inflation at the producer level and they're not passing it along to the consumer, that means it could adversely impact earnings going into the next quarter. So watch these numbers very, very carefully. Friday, import prices, again, this is a measure of inflation. It doesn't seem like a big number. It is because we don't manufacture much. In fact, I mean, China is eating our lunch now in terms of manufacturing ability. We are no longer the largest manufacturer in the world. China is. We have the largest economy because of our services business, but in terms of manufacturing, they're they're dwarfing us at this point in time, which is pretty scary when we're doing saber rattling over in the South China Sea. OG1 Kenobi, welcome. Been a while. Good to see you. Earnings. We booked profits on AI, C3 AI. I think it was last week. I won't be in this trade for earnings. I think it's extended. Could it move up higher? Sure, absolutely. I'm probably going to regret it, but that's just I don't like carrying large positions into earnings, especially when they are extended. And this one is pretty extended. Oracle comes out after the close on Monday. We get a home builder, Toll Brothers, and on Tuesday, AutoZone pre-market. After the bell on Tuesday, we get meme stock action, GameStop. Wednesday, Macy's before the open. I hear that Bloomingdale's, they own Bloomingdale's. They're opening up shops over in New Jersey, and they're packed. So watch out for Macy's earnings. They may be a sleeper stock. Adobe after the bell on Wednesday. On Thursday, we get Broadcom and Costco. So that's pretty much going to be the end of earnings season for this quarter. So a pretty eventful earnings calendar this week. So let's keep an eye out for it. So, folks, we're going to be going over seasonality. I talk about TrendSpider all the time. So please, if you're not currently a subscriber to their product, I strongly encourage you to please head on over, take advantage of all of their solutions. Fundamental analysis, technical analysis, charting, alerts, backtesting. It's just too much. It's literally too much to go over. Uh, Automate your trades, build custom indicators. All the trades that I have done using a Bollinger Band squeeze, I have found through TrendSpider scanning. I will get you that scan for free if you sign up with them. I give it away free to our silver and gold level members. And frankly, you get my service for free if you sign up and get TrendSpider through me. So head on over. If you're not ready to join the contrarian trader, fine. I get it. Get to know me better. But for now, head on over. Use the link below. I don't know if they have a special offer right now. Let's check and see. No, they do not. Get a 35% discount code using my discount link below. Head on over, check out TrendSpider, take a tour. And again, I give it away free to our silver and gold level members. My service pays for itself. So, and you get TrendSpider for free. What's the difference in the version I give it away? The version you get is a cross between the standard and enhanced, and you get all the functionality. All that's different is the number of alerts you can set up and the number of scans. Frankly, I use the gold level version. I don't subscribe to their product. I use it because I want to see what our members are getting for their dollar, and it's all I need. It's all I need to do my job. So head on over, TrendSpider, 35% discount code. Let's talk about seasonality. This is one of the features that you get. Let's talk about the S&P 500 monthly view first. December, probability of an up month, 69%. Now, as we go into the new trading week, all weeks are not made equal. This coming week is around 50-50. When you average out the next 2 weeks, it's 50-50. Remember, we're already up on the month of December, right? So we passed the threshold at current for having an up month in December. All you need to be is up 0.001% on the month, and that bar turns green. So it doesn't mean we can't have pullbacks. What are we up so far on the month in December? We're up 0.87%, not up that big. So we can afford to have a little bit of a pullback. So just because we have seasonality in our favor doesn't mean that you should be going in, running in, and buying stocks hand over fist. And what you're going to notice over the next 3 weeks is that volume is going to drop off dramatically. And the reason why is because traders are shutting down. They're closing out their books. They're going to carry their profits over into January. They'll probably do some selling in January. Their losers, they'll dump in January. So stocks that are lagging in the month of the 2024, they're probably going to lag further because they're being distributed because of tax loss selling. So if you're thinking about buying a bargain stock that's been down all year long, you may want to wait until early January and wait to buy then. So right now we're going into a period of time where it's 50-50 in the month of December. Let's take a look at how the triple Qs perform on a weekly time frame going back 19 years. A little bit better than 50-50 for the next 2 weeks. But this final week, it's just computed. All you're doing is trading against an algorithm. It's going to be very, very light volume, back and forth, quiet. Let's check in with the MDY, the mid cap. This data goes back 19 years, and for the next 2 weeks, a little bit better than 50-50, the probability that we will close up. So 50-50 is not a great set of odds. So there is a risk of a pullback here in the equity market. So please be very, very careful. Very, very careful. Let's go to comments. Dane, it's been a while, man. Where is the forum? Would you like us? Yeah. Yeah, I check the chat box, Dane. I just posted a link for you. Okay, let's talk a little bit about Federal Reserve expectations. And this is the Fed Watch tool. It's highly reliable. Highly reliable. I guarantee you, Jay Powell is on this thing 5 times a day. So December probability of a rate cut, 85%. Going out into January, about 90%. Now, what could mess this up? Inflation week coming up, folks. Remember why the equity markets are moving up higher. Federal Reserve rate cut. What could decouple? What could derail those rate cuts? You guessed it. Expectations for rate cuts dropping down. Besides the fact that we are ridiculously overvalued. I mean, I don't care whether or not you're looking at price to sales. We're above 2,000 levels now on price to sales. Price to book, very, very elevated, multi-year highs, probably just off of the 2,000 highs. Schiller PE ratio, we are now on a closing basis above. A new milestone has now been set above the 2021 highs on our way to the 2,000 highs. Folks, this is not going to end well. And a lot of people are out there and they're buying stocks based upon the fact that a Trump presidency is going to be great for the equity market. I don't know why anybody's thinking that. If you believe that the president is going to do what he says he's going to do, which is cut spending, and that means that you're not focusing on what has been driving GDP over the past 4 years. It's government spending. I have a chart I'm going to go over in a minute. It's government spending. So if that gets taken away, what happens to the economy? It buckles. Now, his bet is that with deregulation, tax cuts, it's going to stimulate the economy and offset that cut in GDP, offset that cut in spending. And he's probably right, but it's not going to happen right away. So, yeah, there's an analogy I use, and it's a horrific analogy, but I think it's appropriate. You know, sometimes the medicine is worse than the disease. Case in point, God forbid anybody out there or your family has cancer and you have to go through chemotherapy. Chemotherapy is disastrous for the body, but the hope is that it kills the cancer cells before it kills you, right? It puts it into remission. So ultimately, you come out the other side, you're healthy, you're strong, bravo, awesome, live a great life. But it takes time. It takes quite a bit of time to recover from that chemotherapy. And that is the analogy that I'm using. I am not buying stock on the hope that the president's uh, plans are going to keep the stock market buoyed up. The stage is set for a major, major correction in the equity market. I don't think it's going to happen in 2024. I truly don't. Unless, of course, we get a geopolitical event, an earth shattering event, one that cannot be ignored by the equity market. And there's plenty of pins on the geopolitical scale that are out there that could prick the bubble. But we don't know which one it's going to be. It could be the banking sector and commercial real estate. We have no idea. So the Schiller PE ratio through the roof, the Buffett indicator, we are at all-time record highs as measured by the Buffett indicator. Now, the Buffett indicator measures the value of the U.S. stock market here relative to the annualized GDP of the United States. So what if President Trump does in fact cut spending and GDP contracts, yet stocks stay stable and don't buckle? Guess what? It just became more expensive as measured by the Buffett indicator. They got more expensive, even though they stayed flat, because GDP has come in. It's declining. And if one doesn't think that if GDP contracts, stocks are going to fold, they're wrong. If GDP contracts, equities are going to come in. Fears of recession. Geopolitical risks are out there. Former Secret Service agent warns Trump likely to be attacked before the inauguration. I hope not. But I don't know if anybody saw the exchange between I think he's the temporary Secret Service. I don't know what the name of his role is, secretary or whatever his role is. He's in charge of the Secret Service, and he had a blowout, an unhinged blowout with a congressman. And I'm not going to play that. You can play it at your own. I'll copy the link into the chat box. I see there's two of them here. Watch it at your leisure. But it was really disturbing. And then when you get this is from a Secret Service agent. I think he's retired. And he had this to say. It's a very short clip about President Trump.
Well, this is President-elect Trump, soon to be President Trump, back in office again. They are going to have a huge task before them. He travels a lot, right? I mean, he's out there a lot. Where are you with your confidence that they will be able to safely secure the president?
Oh, I'm not highly confident at all. The Secret Service that you see out there today is not the Secret Service of yesteryear. Somewhere along the line, they completely dropped the ball. That testimony we saw today was purely a smokescreen to cover up the shortcomings of a politically compromised agency. It's gotten to that point. This whole testimony was oh, great. We need to get back. What made this great was the ability to put human intelligence and power on the street, effectively secured environment to make it safe for the President of the United States. I don't see that here. As a fact, I don't think I feel alone in saying that. I certainly can see something now at the inauguration day. And it's not 20 years down the road holding it to get with the job. It should be something much bigger. I don't think the Secret Service is anywhere near what to handle that situation.
Okay. So he said what people don't want to have spoke is the fears, the warranted fears. There's already been two attempts on the life of President Trump that we know of. And you have an incoming cabinet that is made up of outsiders. and the establishment is freaking out right now, freaking out about it. Also, the fact that this has been published tells me that the war in Ukraine is about over. Don't be surprised to wake up one day and you're going to see Zelensky wherever they put him, Paris, wherever they put him, he will be out. He'll be flown out with his family and his entourage of thugs out of the country, and that war will be over. It's probably sooner rather than later because a whole new war began over the weekend. I shouldn't say it's a brand new war. It's one that we have been fighting for a while now, but uh, it's been a real quiet war. And now Damascus, which is the capital of Syria, has now fallen to Al Qaeda. Think about that. The Russians have now flown Assad, the former president now of Syria, and his family out of the country. I'm in shock that the Russians allowed this to happen. And it just goes to show you all the chatter about the Russians' ability to attack Western Europe and attack NATO is ridiculous. Syria was one of their greatest warm water ports. And I don't know if they're going to be able to retain it. Uh, it was worth fighting for. That's why they were over there in the first place. So the fact that they allowed this just speaks volumes about how weak, in reality, on a global scale, the Russians really are. So all this talk that you hear about fears about Russia attacking Poland, this is why we need to launch missiles into Russia. It's all BS. They just want to keep the war going, the war machine going. And Trump is threatening to stop that the money laundering operation that it is. It's a huge, massive money laundering operation, and it's coming to an end. And they will do anything to keep that game going. And now they're moving it over into Syria. Because what did we do today? We sent B-52s. We sent F-15s. We bombed the living hell out of Syria today. So that small scale war, here, U.S. bombed 75 ISIS targets across Syria after Assad overthrown. We're going to be there if the deep state gets its way. We're going to be there for another 10 years. What would I do? Buy Boeing. Okay, let's turn a little bit about. We know that the thin ice that we are on in terms of valuation of the equity market. We know that we have an administration that's been is about as corrupt as could possibly be. So I've been very verbal in my concerns about the revisions that I expect to be coming out in January. I wouldn't have been shocked to see them last week. We got some on ADP. I'll go to that in a moment. We didn't get it on non-farm payrolls. That was what I thought. But here, off of global market investors, U.S. economy lost 1.34 million full-time. That's the opposite word. Full-time jobs in 1 year. Remember, the number that you are fed by the financial news media is from the Bureau of Labor and Statistics. It is the U3 number. It's a brand new number started back in the I think early 1990s. What used to get reported was the U6, but that was too honest of a number. That reported people that were no longer looking for a job or partially attached, or only working part-time. They want to be full-time workers. So they decided, you know what, this is not looking good for us. We're going to make the U3 report. And they don't include the part-time workers. So in reality, we have lost 1.34 million jobs. Full-time jobs have now fallen year over year for 10 months straight. This is the data that we know. What is happening with the job market? Data revisions. ADP private payrolls were just revised down by 49,000 for October, the biggest adjustment since May of 2023. We had a bear market in 2023. This comes after November private payrolls came in at 146,000, below the expected 150,000. Where are the jobs coming from? From Sven Henrik. Don't worry though, government jobs increased by 2.1% in November. So here's when the Biden regime came into office. Look at the increase in government workers since that point in time. So if you're wondering who's getting these jobs, they're government workers. They're hiring voters. That's what they're doing. They're hiring voters. So let's talk a little bit about sentiment. We spoke about sentiment on uh, Thursday Night Live, and I wanted to spend a little bit more time on this because, again, folks, we have economic data that is just not real. It's not real. It's it's pixie dust. We have a market that is extremely overvalued. And again, I'm not selling stocks tomorrow, not unless I have to. I'm not selling stocks tomorrow. I'll ride it until I get stopped out, or I see that we have dark clouds on the horizon, and I see those clouds. But it's like the analogy I like to use is that it's like in the cartoons when you were a kid, and the cartoon character is standing on the train tracks, looking down a dark tunnel, and he sees that little light. You know it's a train, and that train, that light gets bigger and bigger and bigger. The question is, does it get off the track? So we see that light, that little light at the end of the tunnel, and it's growing bigger by the day. We know it's coming. As sure as God made green little apples, the question is, when do we get off the track? And it's probably going to be pretty quick. Probably going into January, I will probably be not bigger into bonds, but bigger into cash than I am right now. I already have a big bond position. It's doing very, very well at current for the past couple of weeks, TLT. Uh, and I'm just parking cash there, waiting to put it to work because we've been talking about the yield curve and its uninversion for quite some time now. And I haven't been as verbal about it because it hasn't done much. But last week, something changed. And that something was that this is a weekly chart. We had failed. We put in a double top here the week of November the 4th, and we broke down below what was a support level in blue. But something changed last week. We captured it. We broke back out. So the question we're led to take a look at and answer is, how do we look on the month? And we are now up on the month 4 bips on the yield curve. That's a pretty good move. So the way I interpret this is this way. We're putting in higher lows. Now, when I get concerned about the equity market is when we trade in this gray zone here. That is historically where equities buckle. It doesn't have to be immediately when we cross over, but in this range, that's when equities traditionally buckle. So that's out there. We know we have the uninversion of the yield curve. That's back in play now. It took a break. It's now back in play. Now, I want to talk about a couple of stocks, and this is the type of information you get over in the Bull and Bear Banter area. Franklin was good enough to post this. Really good article off of TrendSpider about SMCI, and it's a very, very valid uh, article in terms of raising concerns. Now, I think it was Jody that asked the question on Thursday Night Live. What about SMCI? I can't buy it because while sure they had a new accounting firm which came out and they talked up the expectations for a positive outcome of their audit. The strange part is that it happened like that. Ernst& Young quit. Somehow or other, this firm, well-known firm, said, I can't take enough. It's just going to be public, but you know what? We're done here. They got frustrated at something. All of a sudden, this new firm comes in. I don't know if they're a big firm, a small firm. I have no idea. They could be the great firm for all I know. They come in, and actually two firms here. And there was no evidence of fraud or misconduct. And it dismissed the claims underlying Ernst & Young's resignation as auditor. Okay, fine. Where are your SEC documents? Why haven't you filed them? They have yet to file those documents. So once they file those documents, and we don't get an article out of Hindenburg again saying that this stock is a keg of dynamite, then I'll revisit it. But right now, no way, no touching. And we bought the stock down here, right at around $17.50 per share. We sold it about 2 weeks ago. We made about 50% on the trade. We're out of it. I don't want to be involved with this type of risk. This is not the type of risk that you want to see or be involved with. This is the type of risk that you see at the end of bull market. You see sketchy stuff going on, and once you start seeing that type of stuff, it's like what Buffett says about when the tide goes out, you see him swimming naked. And I think that this could be one of those instances. I don't know for a fact, obviously, but if it smells like a rat, it's probably a rat. So I wouldn't touch this stock with my worst enemy's money right now. So I would avoid it. Now, another bit of news that came out on Friday after the bell, and I mentioned this earlier, that AppLovin, and we have a short position here for full disclosure, and I want this thing to crash tomorrow, but we don't know if it's going to. Maybe it's going to move up higher. I don't know. Now, the stock corrected by 4%. And this is a perfect example of you don't know what you don't know when you're shorting something. So apparently, one of the key drivers behind the rally in AppLovin is the fact that there was an expectation that they would be added to the S&P 500 on Friday afternoon on their rebalancing. The S&P 500 rebalances once a quarter, and there was an expectation that AppLovin was going to be included in that rebalance. So here's the headline: Apollo Group, Coinbase, AppLovin could be picked for S&P 500 today. They were not. It didn't happen. So you're going into a new trading week with AppLovin monthly RSI at 94.69, trading above its third standard deviation Bollinger Band for the third consecutive month. Weekly RSI, we closed out the week with RSI 95.7. Daily view. I mean, it's nuts. Daily view. This is not the chart I wanted. This is the one I wanted. Daily view, we have RSI of about 88.34. We were above 90 at one point in time. I added more to this trade on Friday above this upper band of resistance. The shares ultimately pulled back a little bit, and after hours, they traded down to around the lower band of the support level. Now, did I go shorting more in the after hours session on Friday? I could have. I didn't. Why? Because I don't like the chase. Just because this news came out doesn't mean that they're not going to try to breathe life back into this stock in an effort to try to get it back to where it was so they get institutional money that they can get out. They'll create a pool of liquidity by taking out a bunch of stop loss orders by shorts, and then they'll sell into it. So anybody looking to buy this stock is crazy right now. Anybody looking to short this stock at the open on Monday, you should wait until you see how we are poised to close out the day on Monday. If we close out the days at or near the lows of the after-hours session on Friday or lower, then you probably have a good short on your hand. If we rally back, then uh, be careful. You need to wait for bearish reversal day before you go adding to the short side. That's what we plan on doing. I plan on adding more to this short this trading week. If it doesn't bounce back to the recent highs, then in all probability, I'll sell a call spread going out to like $500 and out around 40, I think it's 42 days now, 41 days maybe to expiration, to January expiration. So that's app 11. Let's see how they close this out. In the regular hours close on Friday. Not good. So in the after hours, we traded to around, well, we traded down here, but we bounced back to here. So ideally, we get a big gap down and they keep it down. We have a one-sided day. That means that there's nothing but selling. Every rally is sold. And that's what we're looking for at 11. And we will look to exit stage right, ideally, with a profit. Let's do some chart requests. My voice is going, so I apologize. I'm going to cut it off with the charts that have been inputted so far. Franklin. Now, I believe Workday, they reported last week, right? So that's out of the way. APO, APLD. Bonnie Bean. Hi, Bonnie. You're welcome. TDW. And Trader Isaac. CORZ. Sean. Rumble. Ron. MSTR. Highly correlated to Bitcoin. Pat. CPB. All right, we're going to shut it off there because I'm losing my voice. Folks, and this is being brought to you again by TrendSpider. Please take advantage of the 35% discount link below on YouTube, link above on Twitter, and I give it away free to our silver and gold level members. Workday. All right, so let's pull back here for a bit. Woo! So this here is revenue growth. This is going up. So we have strong revenue growth. Actually, wait a minute. Fundamentals. No, I don't want a comparison. Let me make sure this is right. Let's go back. I want to make sure I didn't have a ratio on there. Yeah, this is good. It's even better. Wow. Wow. Very, very strong fundamentals. Here's the weekly view. I think this stock has got to be bought. Let's take this off. I mean, I think it's a buy. Here's your higher lows. Let's throw some automated trend lines. Price target immediately is at 313 per share. These are automated trend lines, folks. I did not draw them. That's the algorithm. Where would I buy this thing? I would honestly probably, we'll go to the daily chart in a moment. We'll talk about that. But looking at the weekly chart, I'm thinking I would want to nibble on the shares now. Small position, scratch the itch, and wait for the breakout above this upper band of resistance here at around 273.37. Let's get a breakout. Our alert is set. If the equity market continues up higher, I think that this is going to be moving up higher as well. Daily view. Oh, this is beautiful. So we broke out on Friday. I'm a buyer at 273.21. You're probably going to get the retracement back. 273.21. I'm a buyer of the shares. What do? They rallied it after hours? They must have rallied it after hours, Franklin. So I would wait until it closed above 273.10 on a daily time frame, and I would begin to accumulate the shares. I'm bullish on it. I don't know what happened after hours, though. Oh, did they get added to the S&P 500? I think they did. I think they did. Tim, Bob, every Sunday night you are getting better. Thank you for that. I appreciate that. Love the current events, comments. Thank you very much, Tim. Thank you. Thank you for being here. I'm humbled by everybody being here on a Sunday night when you could be with your family. So I'm very humbled. Thank you. So workday bullish, and the thing to worry about, folks. A lot of times companies get added to the S&P 500, and it's a great thing. Keep in mind one thing though: people automatically start buying the stock because it's getting added to the S&P 500. Many times, and it doesn't appear as though in this case it is the instance where Workday has been front run. If that's the case, I'm pretty sure it got added to the S&P 500. Ah, thank you to validate my sanity. Yeah, it was added to the S&P 500. That's why you got the after hours move that you did on Friday. Many, many times. Many, many times. And again, it doesn't appear as though this was priced in, as it's been priced in with App Lovin. I mean, App Lovin, look at this chart. That was priced in. Workday was not. That being said, I think that you could still get your pullback to 270. Let's call it 273.50, 274.50. You get a pullback to that price range. I still think it's possible. Why? Don't forget, this was probably in a mid cap, a bunch of mid cap ETFs. What are they going to do? They got to sell it. And sure, S&P 500 funds are going to have to buy the stock. There is an offset. It's not a net gain. And sure, are they going to spike it tomorrow, being added to the S&P 500? Yeah, because it's the headline news. The algorithms are going to spike it. Everybody's going to run in, not realizing the full picture. Will it pull back? Sure it will. SMCI got put into the S&P 500 months ago, and it's far lower now than where it was back then. And that was before they got called out by Hindenburg. So all is not what it seems. I would not chase the stock simply based upon the fact it's going into the S&P 500. Patience, patience, patience. The stock will come to you. Thank you for the clarification, Franklin, as always. APO, Apollo Management. This is another one. Now, Franklin, did this one get added as well? It looks as though it did in the after-hours session. Let's take the after-hours session off. Last tick, regular hours session, 177.85. Yeah, so this got added to the S&P 500 after hours. Again, the same deal here. This looks like the inclusion into the S&P 500, as noted here on Barron's, December the 6th. They were anticipating this addition. I got too many tabs here with Trent Spider. There we go. So where do I think it's safe to add? I wouldn't chase it. I just wouldn't do it. Show me a pullback to 182, 182 per share. And I think longer term view, I think it's going up higher. It's a very good looking chart. A classic case. Look at this Bollinger Band squeeze back in July. They did a liquidity hunt here, and then right afterwards, they ripped it up higher. Classic liquidity hunt. APLD. Let's get these trend lines off. This is a weekly chart, Applied Digital Corporation. All right, so we've been a lot higher. We have a lot of overhead supply here. Anytime, Franklin. My pleasure. I'll talk to you tomorrow. My pleasure. So I'm a buyer of this stock, and it closed above $12.04. You're going to have a lot of overhead supply there. These buyers back here who thought they were getting rich and held through this sell-off, they want their money back. So they've been sitting and watching this thing since 2021, looking as a red entry. The minute that thing turns green and they're back in the black, they're dumping. So I do not think that this is going to be a straight shot higher. That being said, the path of least resistance at current is to the upside. We broke out last week. Here's that $12 mark. I would wait to buy above that mark. If you wanted to scratch the itch, I'm fine with that. Stay small, no more than 20% of your intended allotment. Get bigger on a close above that resistance level. Daily view. So nice little breakout here. Breakout and a retest. So it looks good. It's on the comeback. It's going to take time. There's going to be a lot of backing and filling. The stock there's a lot of overhead supply up there, a lot of dead bodies above, and they want to get made whole. TDW, this stock was on a tear. This was a Bollinger Band squeeze back here, and it just took off. More than double. And it just goes to show you, you're welcome, George. You're welcome. One of our members from the great area of Quebec, Canada. So a nice, more than double here. Great rally. This stock is a short. It just goes to show you that all stocks are cyclical. I'm not a buyer here. I think in all probability, we're going to move lower. Would I short it here? I do not want to do that. Would I short it here? No, because you're going to have a lot of support down at around $40 a share. And that's where I think it's going to go. I think that if you're going to stay small and exit stage right at $40 a share, $40.50, fine, short it on any rally. But that's where I think it's going to go. What do they do? Report earnings? Yeah, earnings killed them. What are the fundamentals doing? Fundamentals are still rising here. Revenues are rising. I've been watching for a bottom down here. Unless their guidance, I'm not familiar with their earnings report, so I don't know whether or not they guided down. If they did, I would avoid it. If they did not, and they maintained their forward-looking guidance or even increased it, and the stock is just getting taken to the woodshed on profit taking, then I would be a buyer. I'd look to start building an accumulation, building a position at around $40 a share. Nibble, nibble, nibble. But strong revenue growth here. So this may be an opportunity. I would check in on that last earnings report. TZ, Bob, you made my wife money on sound and stuff. Oh, awesome. Thank you very much. Yeah, that stock treated us very, very well. We're out of it. Are we out of it now? Completely. Yeah, we're completely out of it. Yeah. I had a trailing stop loss order in. Oh, no. I did not have a trailing stop loss order on that one. That was Datadog. We exited that one on the gap the other day. And yeah, good trade. Congratulations to her. She made the decision. She gets all the reward and the pat on the back. Sorry about the cough, folks. My daughter got me sick. CORZ, Core Scientific. Not a lot of data here. Quarterly view. Let's drill down. Let's go weekly view. The path of least resistance is clearly up. There's no data for their revenue growth. That's weird. Earnings, I could see no data. Revenue? That's kind of weird. Okay, so what's the shot here? I think that last week was a kind of like a doji star week, a sign of indecision. Bulls and bears are having a little bit of a tug of war. I'd accumulate right down here at this $13 per share mark with a stop. Actually, I'm sorry, $15 per share with a stop right below. Let's go to a daily view. You have a Bollinger Band squeeze setting up here. Bollinger Bands in red are now trading inside the Keltner channels. That could be a good setup, but it's not mature yet like it was back here. I should say here, where you had a beautiful rally. Right now, you're in no man's land. There's no demand. Volume is light. Shorts don't want it. Bulls don't want it. It's just consolidating gains at this point in time. I don't see a compelling reason to go buying this stock right now. I wouldn't. Zero reason to short it. I would stay small with buying. If in fact it does play out, where you get a Bollinger Band squeeze, they're going to try to take it down before they take it up. They're going to try to take out. They know there's going to be stop loss orders down here, right along this $15.30 mark. They're going to take that out. They're going to take all those stops out, and then they're going to take it up higher. Expect it. It's what they do. It's the game. You know, don't hate the game, hate the players. So accumulate small, wait for them to try to take out stops, step in, as long as you have a tight Bollinger Band squeeze like you had back here. Rumble. Whoo! Look at Friday price action. Looks like they got added to the S&P 500. Beautiful chart. Monthly chart. We didn't even get a retest of the breakout point. We broke out last month. Continuation breakout this month. Weekly view. I got to change these Bollinger Bands back to a 2. I've been doing analysis with a 3. Sean, we're trading above a 3D Bollinger Bands. I wouldn't initiate. Doesn't mean it's not going up higher. Look at the Bollinger Band squeeze. Why didn't this appear on my screen? What are the fundamentals? Probably because it didn't meet the fundamental requirements. All right. The chart looks good. The path of least resistance is up. Here's an intraday view. You can pop this easily on Monday higher. Here's a daily chart. I think it's going up. Were I long, I'd probably put in a trailing stop loss order. What does RSI look like? RSI daily time frame is about 70. And a lot of times you're going to read technical analysis for dummies. They're going to say short a stock or sell a stock once RSI goes above 70. That is nonsense. You will go broke. Do not do that. I would stay long of the trade because what this is implying is that the stock is very strong. It is under accumulation as noted by volume. I would use a trailing stop loss order, let the market take you out, which is what I should have done with SoundHound. My bad. We left a little bit of money on the table there. So Rumble, bullish, it's getting extended, trailing stop loss order. MSTI, highly correlated to Bitcoin. Here's the weekly view. Failing to break out. Look at that Bollinger Band squeeze here. I spoke about this one. As a matter of fact, this is one of our watch stocks. We opted to go with Datadog rather than MicroStrategy, and we're at resistance. In fact, we had a breakout point failure. We broke out here the week of the 18th, failed to hold it. We're still struggling. You can't buy this stock until we close above 401.47. And if Bitcoin is correcting, and even if we do recapture that support level, I would not be a buyer. It's too highly correlated. Thank you, Sean. Have a great night, my friend. Talk to you tomorrow. CPB. I knew it was Campbell's. Wow. These companies are going to get killed. New regime coming in, Bobby Kennedy coming in, and these companies which have been selling poison, they're not going to get away with it. They're going to have to put real ingredients in these products, and I think that this stock is going down. It's going to go down a lot further. This is a monthly chart. You already have the trend established to the downside, and once we start breaking down below, I don't know, $42 a share. We closed at 42.73. I think we're just going to gain momentum to the downside. I would avoid this thing. I think it's a short on a break and a close down below, $42 a share. Names like Kellogg's, is K still their symbol? Kellanova, that stupid name. They're doing okay, but the FDA is about to ban the red dyes. So these companies are going to have trouble coming down the pipe. Apparently, they must have had a good earnings report. They did. Good earnings report. They've done nothing ever since. What, did they get bought out? That price action it looks as if it got bought out. That's it, folks. Thank you for being here. Please like, subscribe. Don't forget, 14-day free trial offer the Contrarian Trader. Get TrendSpider for free. Get my analysis. My service is for traders with day jobs. So I do the analysis for you. You get access to my trade alerts, and you get TrendSpider for free with silver and gold level membership. You're not ready for that? Fine. Head on over. Take advantage of TrendSpider. 35% off. Use my discount code. Link below on YouTube. Link above on Twitter. Everybody have an awesome remainder of your weekend. I will talk to you soon. Jody, Thank you very, very much. Thank you for being here as always. Have a great night. I'll talk to you soon. Be well. Have a profitable trading week. Thank you, Paul.